Hi, thank you for joining me. Let's talk about market maker models. I want to show you one fantastic technique, one thing to notice about market maker models that will make creating a bias for your trading session incredibly easy. So I've used this all the times, and it's all about identifying the original consolidation and how that will tell you exactly where price wants to go in the session once you've identified it. I will give you a brief introduction to market maker models. We won't be super in depth because I want to keep this video a little bit short, but there will be a lot of power in the simple idea that I want to show you today. Okay, let's start. Disclaimers. Okay. All right. Let me tell you a little bit about market maker models, what they are. It's an ICT concept that's very dear close to my heart. It's one of the most elegant ideas in trading that I've stumbled upon, and I've been using this idea for a long time. Now, this is how, it's a part of my sketches. I'm not very good at drawing, but this is how it generally looks. And when I say this happens all the times in the market, I want to make you understand that it does happen all the times in the market. And if you can identify this area, basically the whole narrative, it unfolds in front of you, and you can catch and take your trades and find your setups with the highest degree of confidence. So much so that when I identify this kind of shape in the market, I increase the size of my trades, sometimes twofold, sometimes fourfold, because some of these setups become incredibly high probability. Let me show you. I'm just going to skim through some. I take this every week on NASDAQ when I see them. But let me just show you a small selection of market maker models that I've traded and I've talked about in the past year and a half. So I have, of these ones, you have to believe me. I mean, you can just go on my Twitter account. I have this one, the same shapes, called out beforehand, dozens and dozens and dozens of time, traded live. You will start after a while to recognize that the market moves in repetitive patterns that you can predict. Let me just show you. Okay, this is a bearish one. This is a bullish one. We're going to go through one, and I've been taking this for 1.5 years, and they, once identified, they are very reliable. Now, the entire return to the origin, return to the term, let's say the original consolidation of market maker model, it doesn't happen 100% of the time. Sometimes it fails halfway. So anything I say, you have to modulate with a probabilistic thinking. So sometimes I show things and I say, hey, this will make you rich. This is like the tool that will never lose. This is not how trading works. You find an edge that gives you a slight higher probability of something happening over something else, and you build around it, and you have a tight risk management. So don't get fooled by people that tell you that you can teach you one weird trick and then you can print money. I do that in the titles just for clickbait, and it's fun. Please take a YouTube video, random YouTube video you see clicking around with a grain of salt. You have to modulate and interpret and study and prepare and validate anything you see online with great attention. So do not believe anything I tell you. Test it out yourself. And do not hold me responsible for your actions. Okay, that's also important. But let me go through. Look, I do have dozens and dozens and dozens. Some are just same screenshot, just at different points in time. But we understand each other. I don't see myself anymore. 1 second. Oh, wow. Yeah, okay. So very briefly, let's go through what is a market maker model. Actually, first I want to say, because I had noticed a couple of things that I wanted to say, but we'll see if I find them. The first thing I want to say is, why does a market maker model work like this? This is the bullish scenario. Of course, the bearish one is opposite, where the original consolidation is here. Then there's a certain run to a point of interest, and then we go back. So you can see it in abstract at a high level as the market or major entities, or the market makers hedging themselves, as a huge repositioning of the market, where big players move their average position down or profit from huge move, repositioning themselves. So there is this, there's two concepts I want to talk about. But so basically what happens is like an accumulation happens at a critical point in time or price. And then we have a huge move. Let's run it like I designed it, which is, let me hide it all. And we go through it step by step. So a market making model starts with original consolidation. That is an area where reached a certain price, it starts stalling. And then the impetus to continue to the upside is exhausted. And the, let's say, liquidations start to happen so that major players can re-enter the market at a better price. Okay? That's the theory. And how do you identify the start? This is the start of the whole market development of a market maker model. Well, you identify three things, and this is actually the trick I wanted to tell you about. If you can identify as early as possible this original consolidation, this will tell you everything you need to know about the remaining session you're trading, because you know that with a certain degree of probability, market makers, the big algos, the hedge funds want to return there after they position themselves much better. Okay, how do they do it? Well, so the sloping has three looks. I haven't seen mentioned this thing before, and so I claim it. So many times you just want what they call equal highs or a flat top. So sometimes there's a lot of wicks that are lined up, and this is what mostly people expect as a target in ICT parlance, or it's the generic look. If you Google market making model, that's how it will look. But there's a different shapes. So sometimes there's a trend line liquidity, like there's an angle trend line, and sometimes there's really a parabolic sloping, where this happens along a line of a parabola. So your task is to go, if you're trading the AM session, go into London and check if you can see this accumulation around Asia or London, or the London session, or anywhere. You just zoom out the chart and see if you can see an accumulation of this sort. After the accumulation, you want a huge move. Accumulation, a huge move. The move will reach some POI, point of interest, where major players will step in, and then basically the market will reverse and return back. Now, to be very honest, if you can identify and call out the fair value gap, the liquidity level where the market will turn, it's fantastic. You can get an amazing entry down here, but it is not needed. I'll tell you why. So on the way down, let me continue. On the way down, the market will create some accumulation zones, distributions where major players are liquidating their positions until we reach a moment where we reach an important point of interest in the market, some volume level, some option threshold where people get liquidated. It doesn't matter, because the chart, the price action, contains a lot of information. And me being a price action trader, I do look sometimes at the news and at events and at other things, but in general, I use 99% of the time, only the price I see on the chart. The price contains a lot of information, and that is what I use. So once you see a flip, a market structure shift, a breaker forming, however you want to call it, and you can sort of identify that maybe there is a very important level, like a daily low or a 4-hour low, or we've reached 50% of an imbalance that happened a few days ago, and you see that there's a major flip. You have seen that there was this sloping at the start. That's when you can frame that we are inside a market maker model, in this case a market maker buy model, and major players will reposition themselves and carry price to the original consolidation. And so we will start the climb on the other side with various manipulations, which I'll show you. This is what, if you are familiar with the terminology of ICT, the secondary accumulation or the third accumulation. At one point during the process of returning to the original consolidation, we reach a moment where it will snap back really fast. That's the fastest move you can catch with very little drawdown, very explosive, and very good risk to reward ratio. You see me in my Twitter feed or stuff I post to my friends in Discord that I speak about the secondary accumulation or the secondary distribution a lot. And then everything goes back to the terminus. So the movement is complete once we go back and go back up. Okay, what do you want to say next? Oh yes, so many times during your task is not to catch this item, is not to catch the exactly moment that the price return flips. Sometimes here there's if you have seen my other videos on the slow reversal, sometimes the reversal will take a long time, an hour and a half, 2 hours, and will come down a few times before starting the reaccumulation. So the look can vary. Please do not be absolute in this. The look of a market maker model. Sometimes I had an argument with a friend that said, no, this is not a market maker model because we moved down and there was not redistribution. It doesn't matter. For me, for my definition, it's my definition and not the official definition. A market maker model is defined by a very clear original consolidation that it was an accumulation that failed to push up and actually broke down. And that is an indication to me that, we will go back there. Sometimes there's no distribution areas, there's no order blocks, it's just one way down. And still, we will go back if this area is very clean. Okay. Many times during the reaccumulation phases, there will be fake outs. So people have seen this huge move down, and they might still be bullish. So what the price does is tries to go up and do fake outs to break down. Lots of people are trying to go short here on the breakout. What we do is we buy and hold. So those are the manipulations or inducements, which I noted. Sorry. They are here. See, a fantastic presentation as always, Nicola. Nice. Okay. So burn this image in your mind, because if you can identify this, you will be able to see once we're here, when we are, let me use a different scribbling. Wait, one second, where's the paint? Where's the painter? If you can identify that we are, even if you arrive here, you realize that you see, if you only see it, oh, damn it. Even if you only see it here, that's actually the place. You don't need to catch the absolute pixel perfect, point perfect reversal. You can be here and have a very high degree of confidence that we're going back here. That's what I do actually. Sometimes I'm able to catch the smart money reversal, and sometimes I just wait for my time, the right time, to enter, hopefully, in these manipulation areas. Okay, and I do many times. Example, yeah, just go back just to show you guys. My mouse is blocked. Okay, one second. What? Stay here. Okay. My mouse is failing me. Wow, no, I need to do this. 1 second. Okay, yeah, so see, there's a original consolidation here, and then there's a family zone, and we have a flip. So here I already thought we reached the 4. I didn't talk about standard deviations. So no, projections. Not so. I used the S word wrong. People are going to come after me. No. All right, sorry. Okay. Next chapter in this presentation is to show you this is actually drawn from something that happened here. Let me show you. Right. There you go. Okay. So just so that you can go and check an example in the market. I just want to show you. I just picked one of the dozens and dozens of examples I posted on YouTube, on Twitter, on X, and see if you recognize the pattern. This happens all the times. So this was the 24th of February this year. It was after the London Open at 3:15, but it happens in the AM session. It happens all the times. As you can see, there is an original consolidation, and this one is the one with equal highs. So with like price tried to breach here, failed, and the left. Liquidity, a lot of liquidity above here. So we start to break down with some attempts to continue to the upside and failing, some manipulations. The blocks, it's pareidolia. It means yes, you can make it look like the shape you want, but there you can see that there's some struggling, finally a breakdown, and here there is what we call a breaker, like I mentioned. And we come back to retest the breaker. Some people using market structure might say we came back to retest some area responsible. There is a fair value gap. So this is one of those beautiful breakers with fair value gap inside. However, whatever you're entering, we're not talking about entry models here or trades you can take. It's just, this is a framing. I'm giving you tools to build up a framing. Once you see this, then, and you see that there's an original consolidation, you can look for an entry. If you're confident that this is the SMR, this is the breaker, you can take it. It depends on the times. So personally, because I'm very familiar with the statistical times of reversals of the London session, if I see a wick and a breaker created at 3:15, I know with a high degree of probability, because I have statistics backing this, that it could be the low of the 2 to 6 4-hour candle. And I have videos on this about the statistics of the 2 to 6 4-hour candle, which is the London session. And so for me, it becomes a very high probability that that's the low. And then you can enter. And most likely I entered somewhere here. I don't remember. This was 24th of February. But you can go back into my X feed and see. I wanted to show you an example of a sloping market maker model, because that was what I wanted to introduce as a difference between many things you see about the market maker models. And I want to show you an example where there's just a very violent sloping. Let me see if I can quickly find it. I had so many of these. Yeah, this is an example where, yes, there's equalize, and then there's a sloping here. See, that's not exactly what I wanted to show you. There was one that went down 400 points a few weeks ago. Yeah, so here is an example. This is okay. It's wonky. I understand. I agree. This is a huge, but you see there is a parabolic sloping. See, And that is why I was ready, and I tried too long from here, but it was the wrong time. I think I have a video on this, by the way. And this is the famous secondary accumulation I was mentioning. You see, we did a smart money reversal, first accumulation, and then here a bit of accumulation, and then we return back to this huge accumulation to the top, and you can see this parabolic sloping. Okay. So what is this huge trick? What is this huge trick that will make your trading and give you an incredible bias, a high probability bias for your session to find the right setup? Okay, look for, I'm sorry about the beeping, look for this sort of accumulation at the top of an incredibly violent down move or up move. And if this is a very clear consolidation that can have three shapes, equal highs, a liquidity trend line, sometimes both, or a parabolic sloping, that can give you framing for an insanely powerful bias for your session. Okay, that's what I wanted to tell you. I hope you found this. We are at 20 minutes. I think we covered quite some ground. I hope you find this useful. Let me know in the comments. Please, whatever you study from these videos, do not take anything I do or say as truth. Test it out. I don't want to see in the comments, you're cherry picking. This doesn't work. You always have to put in your own work to validate the ideas that you see. Always. You are responsible for your own trading. You are responsible for your education. You're responsible to, even though I share my enthusiasm and experience and things that work for me, you still need to put in the work, okay? We are adults. We understand this, okay? Anyway, I also want to say, for people that get to the end, hey, by the way, did you see? Oh, right. For people that get to the end, thank you. The response to my latest video has been incredible. We got to 2,400 subscribers now on the channel. I have no words. I really appreciate you all. You've been incredibly supportive, and I'm gonna keep creating videos for you and share my journey in this trading futures. Thank you again for watching, and see you guys soon. Ciao. And outro, or just click.